Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on June 23rd, last day of school for the kiddos up here, so it's an exciting day. The much anticipated correction, I guess I would say, is sort of upon us. The market's been pulling back this week, snapping. The NASDAQ, I think, had been up 8 weeks in a row, maybe, or 9 weeks in a row, something like that. So, we're finally getting some weakness. I will say, like I mentioned last week, if you're looking for something to worry about, financial stocks are acting kind of funky. The Fed is starting to jawbone again. We're seeing some bad economic data, I think, in China and Europe, which is affecting things as I record this, today. And some of that is bleeding into the small and mid cap indexes. We'll take a look at that, which are still positive, but kind of, approaching key levels all of a sudden. So, it's not like it's a perfect picture out there, and that's why we haven't been, stampeding into all stocks, especially the ones that were sticking straight up in the air. Cabot Growth Investors model portfolio is about 1/3 in cash now, a little bit more than that. So still holding some stuff on the sideline. That said, when you're looking at the leading stuff, so the NASDAQ, the S&P 500 to some extent, but the NASDAQ is clearly the leading index. And if you're looking at a bunch of leading stocks, even from, housing, construction, it doesn't just have to be AI or anything. They all look really fine. So far, I remain very encouraged. I mean, the stocks are pulling back. I kind of had to narrow down the list of stocks I was going to mention today because I don't want to do a 30-minute video. So to me, there's a lot of stocks that are acting normally. This is a normal pullback so far. If that changes, two banks go under over the weekend and, something implodes, hey, we'll change our stance. Like I said, that's why we haven't been, stampeding into stuff. If you bought 10 stocks last week, yeah, that was probably a mistake. But overall, there's no question that this pullback so far is normal, especially when you're looking at leaders. And I would just say the odds strongly favor that. Number one, it probably goes on a little further. We probably need to raise the fear level, the discomfort level, I guess I would say. Some things probably will get hit that look pretty good today, stuff like that. But the odds also favor that, once this pullback, pause, sideways, whatever it ends up being, finishes up, the odds, favor that the next big move will be up, okay? Let me just hop into the chart, show you what I'm talking about. As usual, I'm using MarketSmith. It's a program of Investors Business Daily. You can learn more at marketsmith.com. So you're going to see it. I mean, forget all the news and the Fed and the job owning. The NASDAQ's the leading index. And yes, it is heavily weighted. If you look at the NASDAQ 100 that's equal weighted, it's a little weaker. But even so, you basically had this breakout or whatever you want to call it, kind of an accelerated uptrend. And now you just have this nice sort of tame pullback, okay? And it's not like this is just because Apple and Microsoft are holding in there and everything else is getting destroyed. There's just a ton of stocks that are acting normally and look somewhat similar to this. I mean, not exactly, but nice, persistent, usually pretty good volume advances for 3, 4, 5, 6 weeks. And now we're a week or two, depends on the stock, might be 2, 3 weeks, but a week or two that we're kind of pulling in here. Looks pretty normal, okay? Same thing with the S&P 500. Again, a little bit weaker, but, I don't want to get too far into like the levels. I'm not a big levels guy with the indexes again, but, nice run here, pulling back pretty normally so far. I'm doing this video next week and we're down here. Something comes loose in the system. That's a different story. I mean, you always have to stay flexible and adjust, but you also have to go with the evidence that's in front of you, and so far, so good, okay? The other thing I just want to mention on this before I'm going to dive back into what's going on right now, is just this is the weekly S&P. You had a bear phase. You can look at any index, really. But you had a bear phase really into October, let's say. And then you had many months of kind of bottoming out. Depends on the sector, depends on the stock index. But, basically you went down for, pretty sharply for a few months there. You started to bottom out for a few months, and now they're starting to stretch their legs to the upside. Is it up here free and clear? No. But it looks like, when you put that together, it's not just like, hey, we've had a good rally the last few weeks like this, right into the 200-day, the 40-week line. This definitely smells different where we're, above all key moving averages, at least in the big cap indexes. Now, with that said, when you do dig down, so here's IWM, the small caps. And you can see it's been pretty, like I said, it only had 3 or 4 good days. And it did have very good days, okay? It's pulled back here. It's just to the 25-day line. To me, it's probably approaching key levels, just meaning, it's kind of back where it was the last few months, sort of when it was trying to hold its own here. So I would say if all's well, it should find support in and around here. This is the IWM. I'm not saying it can't, dip below there on some news. But again, if it comes back in here and you're just totally back in the soup, not a good sign. Okay, mid cap's not quite as bad, but similar picture. Again, you had this nice spike up, pulling back in here to the 25-day line, kind of back into this zone if you want to look at it that way. So let's keep an eye on that next week. Same thing, New York Composite, same sort of thing. All right. Again, the back here above the moving averages, which is what's key to us, most important. But approaching key levels. Again, it's if you're looking for something on the margin, it's really the financial stocks. This is XLF, which is kind of all financials. Hasn't participated, really couldn't get going here when the market was, and now as soon as the market pulls back, it's pretty weak. Okay, KRE, which of course is the regional banks, very volatile. But again, I mentioned last week it really hasn't participated, and this week it's down 7% or something. Of course, it's very volatile, but still, back below some moving averages. So, needless to say, you don't want to see this thing just melt away. But I will say that even though, and I can't show it on MarketSmith, but as I checked it before this video here, like 10:30, 11 o'clock, the number of new lows on the New York today, even though the market was down 1% or whatever it was, still pretty tame, which is kind of my favorite measure of the broad market. So we'll see how it plays out. I would be aware of this. I wouldn't ignore it. I wouldn't say, hey, I own, NVIDIA. Who cares about the regional banks? Well, sometimes they'll make you care eventually, but just something to watch, okay? That said, okay, like I said, I am kind of more optimistic. When you look at the leading stuff, which is what I always key off of and usually has better information for you than the lagging stuff, semiconductors clearly a leading group, pull back here, totally normal, still above the 25-day line. Housing, or the XHB, so it's home builders, housing, and all that. Obviously, it's been strong here, nice thrust here, no give back at all in the last few days. IGV is sort of a software. This is more tilted towards big cap names, but this is the software ETF. You can just see a nice, persistent advance and just kind of a normal pullback, right? XLI, not growth, but I mentioned this last week, industrial stocks. Nice pop here. Did kind of nose out to new highs, pulling back here, but totally normal. And even the IWO. So small caps are weak. Let's look at IWM again, okay, just to kind of look at that picture. Not weak, but right here into key levels, moving averages, all that stuff I said before, right? When you look at the IWO, which is sort of the growth portion of the IWM, just looks a little bit better. I mean, I don't know how to really define that. But again, pulling back here, 25-day line, still above this range. So when you're looking at some of the stuff that's been leading, where the money's been flowing, you're not seeing people give up the ghost. When you look at the lagging stuff, it's still kind of lagging. So I usually key off the leaders, and so far so good. The other thing, of course, that I like to look at, we're not seeing a rush into defensive stocks. Yes, if you look at this RP line on a super micro basis, the last few days, it's outperformed the S&P 500. But on the week, the XLP, as I record this, is down 0.8%, and the NASDAQ is down 1.4%. Not some, it's not up 2.5%. The NASDAQ's down 3%. It's not one of these type of weeks at all. So we're not seeing a rush into XLP. Even XLU looks pretty similar. Utility stocks, of course, just kind of chopping around in here. So all in all, I just think the intermediate term trend is up. The broad market by our measures is still healthy, not amazing, but still healthy enough. And the leaders look good. So I'm optimistic. I do think near term, like I said, it's usually not that easy where you're just like, oh, all my stocks are acting pretty well. Usually something will get hit or there's some rotation. You'll feel the pressure, your stocks go down, the rest of the market goes up or whatever. So my guess is there's going to be some more reverberations here near term, but odds strongly favor that, the next big move is up. So I'm still optimistic, okay? A big part of that, obviously, is the individual stock. So like I said, I kind of had a list of a lot. I had to go and just cut them down here. This is ServiceNow. I'm not sure if I mentioned this last week. This isn't going to be your fastest horse. I think I did mention this, but kind of a low-level breakout here. And again, you're just getting this, a nice breakout here, ran from, call it 490 to 580. Pretty good, 49 to 58. Okay, so nice run here. It's really been chopping around the last 2 or 3 weeks. You can just kind of see up, down. But kind of coming right in here to the 25-day moving average. No volume this week, holiday shortened week, but no volume. You can see today or this week, the last few days, you can make up your mind, but, you're thinking maybe the 500 area could be support. Yeah, we'll see. So far, that certainly looks pretty good. DraftKings, DKNG, it's kind of one of these things when they don't participate as much in the rally when the NASDAQ was going up. The question is, hey, when the NASDAQ pulls back, are these things just going to give up the ghost? And the answer so far has been no. So DraftKings has shown leadership qualities clearly. I mean, it's been going up, number one, good volume clues here. Kind of like ServiceNow, except for a few weeks, kind of been chopping around, but respecting the 25-day moving average. It's kind of hard to say it's weak, obviously. There's been some selling up here a few times, so we'll see what happens. But overall, I kind of like the setup. And of course, the moving averages are catching up, so that looks pretty good. This isn't my cup of tea, but Oracle, I mentioned software. You kind of had this accelerate. It's a mega cap name, obviously, ORCL. But you kind of had this breakout a few weeks ago, a couple months ago, and sort of this accelerated uptrend into earnings last week. Now you're pulling back. But again, so far you're pulling back normally. Do I think it can pull back more? Yes. But maybe you get something like this that sort of chops sideways while the moving averages catch up. But my point here is so far, it's not gapping up like this, and then 5 days later, it's back down here. That's what we saw so often in the past 6, 12 months, right? 18 months, really. We're kind of seeing pullbacks, but controlled, especially given the size of the prior run. Netflix is another one. Kind of had this, cup with handle. I'm not trying to mention all big cap names. There's some other ones coming up here. But, nice breakout here. I don't know when this was, say mid-May, big volume right here. And since then, it's had a nice run. And again, you're just pulling back here kind of normally. No volume this week at all on the sell-off so far. Maybe it opens up a little bit. Maybe it comes down into the 25-day line, but so far so good on that one. Lam Research, LRCX, one of the chip equipment names. I mentioned ACLS last week. But just kind of, again, here's your major bottom last October on the weekly chart. Rallies up here, builds a nice tight. Look how nice and tight that is over, 3 months or so, February, March, April. Breaks out on a couple weeks of good volume. And so far you've got 4 weeks of now it's a $600 stock, so it's not going to be as volatile, but 4 weeks of really extraordinarily tight, especially the last 3 weeks, tight action. You can see on the daily chart here, just hanging in there. Mike, what happens if it breaks down? Well, if it breaks down, you're wrong and you sell it. And it's not really a leading stock, but so far so good. The group is leading. The stock has shown leadership qualities. You can see the volume clusters down here. Okay, and so far it's hanging in there pretty good. Looks like a pretty good setup. Same group, ASML. Again, this is my only rub here. The RP line it's really been underperforming the market a little bit net. But it has broken out here, and so far it's kind of holding up. Again, it's a super high price stock, so $700, but it's holding up pretty well there. So anyway, the group looks pretty good. This is sort of in the housing group. There's others too, but Floor and Decor, we used to own this a couple years ago. But again, kind of like, again, with the market big down, months of bottoming action, and just this 100 level ballpark has been, give or take, has just been kind of a ceiling forever, for going back to last summer, really almost a year. I noticed today it's up pretty nicely here. Volume might come in, who knows where it closes the day, but either way, pretty nice setup here in the housing group. Other names, let's see, I think Build was in here, BLD. Yep, this was in top 10 this week. There's a lot of strong and extended, like home builders and stuff, but construction in general, like infrastructure, but then of course housing and stuff, very strong. So this is BLD. You can just see just very persistent advance, pullbacks limited to 1 day at this point. There will be pullbacks eventually, but there's a lot of names in that group that look good. SHAK, just mentioning it because it had this, it's starting to follow through on the upside a little bit. You had the, again, the bottoming action here. You finally get the nice tight base. That's a change in character, the big breakout. There is sort of a activist investor involved here. That's kind of part of the story, but no pullback yet. Maybe if you do get a pullback with the market towards the 25-day line, could be interesting. Again, a lot of stock. Shopify. I'm not a huge fan of the old leaders, but I do respect this was a huge, not just 1, but 3-day volume cluster here after earnings. Okay. And this was after the stock made kind of a comeback attempt. It's not like it was, went from $100 to $2 and gapped up off the bottom. It had been trying to repair the damage. And, kind of tried to nose out to new highs a couple weeks ago. Not so good. But now it's pulling back. Again, no volume on the pullback, pulling back into the 25-day line. So far, so good. We'll see what happens next week, but just kind of keeping an eye on it. GFL, this one's close. GFL Environmental, been in a kind of a persistent, uptrend. It's been in top 10 before. And then the last maybe month and a half, I'd say, Yeah, about a month and a half or so, maybe even 2 months. Just kind of straight sideways, 50-day lines caught up. We'll see what happens. You kind of maybe want to see the stock get a little strength here, but so far, pretty nice setup. Certainly not falling apart here while the market pulls back and there's some bad news out there. Cameco, which is a uranium stock, pulling back in here, but nice breakout. This one was in top 10 too. Nice kind of big, long basing action. Notice how these things get tighter. This is one of the things you learn is the first kind of consolidation is loose, it's messy. The next one, a little bit tighter, but still kind of meh. And then the last one, the third or fourth, tends to be tighter and more proper. Nice volume buying here. It is pulling back here and probably will be economically sensitive, commodities, even though uranium. But we'll see what happens. But so far, it looks like a pretty normal pullback here. And just a couple more. I mean, it's all over these groups. This is Apollo Global, which is kind of a bull market stock, asset manager, alternative asset manager. You can just kind of see there is some old, overhead here, I guess, near $80. But just, this was the banking, worry, crisis and stuff in March. And this action right here, I think it was up like 14 days in a row or something. Yes, we're pulling back here, but I mean, I don't think anyone's going to say this last couple of days is some major abnormal action. Same thing with Delta Airlines. Airlines are starting to pick up. They look great at the very beginning of the year. Didn't follow through. Of course, the market wasn't ready. Then you had your banking issues, bottomed out. Again, you're up, I didn't count, but call it 15 days in a row or something like that, 12, 15, and just no give back here. Obviously, oil prices spike or there's some economic worries. Maybe you get hit, but so far, so good on that. And back into sort of the growth mode, HubSpot. This is one that I think I mentioned last week, but it sort of topped, hit a recent high a little bit earlier than some of the other stocks. And you see it kind of got hit a little bit here. I think somebody was saying there's some analysts had some cautious words on it. But, you look at the weekly chart, not only has it acted great and respected the 10-week line on the weekly, but just recently, I mean, look at this last, 4 weeks, I guess, 3 weeks, 2 down weeks, very, very tight, small spreads, closing tight. I mean, we'll see where it closes today. Very low volume this week. Of course, it's a shortened week, but I'm just seeing a lot of these setups. Now, we could come in next week, obviously, like I said, some bank goes under, whatever. I'm not predicting that, China is imploding or something like that. Something goes bad with the war in Ukraine and, something can change, but, it's not like we just had a couple of good weeks and we're saying, that's it. It's a bull market. It's great. All I'm saying is if you just add up the big picture evidence from, the bear market, the bottoming action, the breakouts, the upside, the positive intermediate term trend, the positive, well, I'll say the tame number of new lows, stuff like that. Okay. I would say that the financials and broad market stuff are not worrisome, but just, you got to be aware of it and just say, hey, we're not everything's in gear. That's no surprise, right? And like if maybe that increases the chances of either a deeper pullback or a longer consolidation if the Fed is still hawkish, or maybe a rotation where these things do pick up, boom, and not to pick on NVIDIA, but whatever, NVIDIA and all those stocks come down 10%, So it increases the odds of something like that. But at this point, again, you're kind of looking for problems, I think. We're still kind of extended here. My guess is a couple weeks from now, we'll still be either correcting or in this range sort of thing. Sometimes you see the market come down, bounce, and then come down again, just to, over a couple of weeks, just to kind of shake the tree a little bit. We'll see what happens. But net, when you're looking at the leading indexes, the leading stocks, and hopefully your own P&L in terms of, what you own and stuff like that, the preponderance of evidence is positive. So I remain encouraged. Okay. That's all the time I have for today. As always, thanks for listening and join me again next week for another Cabot Weekly Review.